Okay, episode number 2 of the intermediate term perspective. This is where we're diving in deep to the intermediate term perspective timeframes, right? H4 and H1 are the intermediate term perspective. 30-minute can be used as well with the intermediate term perspective, but it's mainly the H4 and H1 chart. Okay, we use the H4 and H1 chart to trade in the direction of the LTP. So when we've built in that higher time frame analysis using all of the concepts I've taught previously to build in a direction for just the very next day's candle, we're going to use the H4 and H1 and the market structure, premium and discount, and ranges on these time frames to then trade in the direction of that next day's or next week's anticipated candle, right? It is important to note that there are only two scenarios that we need to consider on the intermediate term perspective, right? To trade in the direction of the LTP. Right, it's only going to do one of two things. Okay, understand this because it's going to make trading on the intermediate term perspective really, really easy. Okay, it's either going to rebalance an imbalance on the H4 or H1, or it's going to run out stops. Right, it will run out buy stops if bearish, or run out sell stops if bullish. Or we could, right, have a fair value gap with inducement, right, where we run out stops into an imbalance. Okay, ideally we always want to be trading a range. Okay, keep in mind the entire LTP narrative to be bullish here. So you should know why we're bullish here. Remember that monthly fair value gap here. Remember the candle closure on the monthly fair value gap, the wick below and the close above. All of that should help you with building in a bullish bias here. Okay, anatomy of a candle, all of it. So we trade into this bullish fair value gap here, and then we run out the buy side here. Then we also form this fair value gap, and we trade from this fair value gap internal to external range liquidity here, with the candle closure confirming it to be bullish on this day. Right, so if we're bullish on these 3 days, why? Because we trade into a higher time frame key level, okay, with the bullish narrative behind this market. We then get the candle closure, right? So that signals to you that the next day will be bullish. This day should be bullish because we wicked below into a high time frame key level. This closes above, right? Bullish. This closes above, bullish, right? Until we get to the opposing liquidity. Okay, so only two scenarios to consider on the ITP, and we're on a 1 hour chart here, okay? It's either going to rebalance a bullish fair value gap, okay? Or run out sell stops. That's it, guys. That's literally all it does on an intermediate term perspective to get to that LTP draw. There's nothing else you need to think about. It's always those two in your mind on this time frame, right? Relative to premium and discount, okay? Market trades into the daily fair value gap here. Then we close within. This bullish move is what caused it to close within. So we're bullish from this day here, right? So if we look at this first example, what does it do? It rebalances an imbalance, trades higher. On this day, we closed above on the daily chart, right? So we're bullish again. What does it do? Sell stops get taken. Expands higher. We closed above on that daily chart. We're aiming for this one candle range. Then we run out sell stops into an imbalance. And then we eventually make our way to the LTP drawn liquidity. Yeah. So literally only two things need to be considered. Rebalance an imbalance or run out stops. Or it could run out stops into an imbalance like it does here. Right? That's it. That's all you need to look for on the intermediate term perspective. Okay, now let's look at this here. External range liquidity is taken here. Okay, we have 3 drives higher, so logically, right, it should trade back from external to internal range liquidity here. So we're going to look at the bullish move down into the fair value gap. Okay, here's ES, right? In case you're wondering about the candle closure here, right? You have to keep in mind the other index futures. It wicks above, right? So looking for lower prices the next day from external wick above to internal. Okay, so this is the candle we're going to be focusing on. So now what do we have, right? And this is why, again, you're understanding why I said only look for the direction of the very next candle. Okay, so the very next candle should be bearish until we hit at least the fair value gap here, right? So we're going to look at this move down, right? Relative to premium and discount on the ITP time frame. So this is a bullish discount low, and a premium high on the 4-hour dealing range. We then close below this, confirming it as an IFVG, right? And this is equity opens candle. Okay. So now we've closed below that IFVG. We know we're looking for the daily fair value gap here to trade from external to internal with the wick below, wick above that confirms the bearishness on this day, right? So we're only looking for one of two scenarios, right? We're either going to rebalance an imbalance, right, or run out a short-term high when bearish on that LTP for the next day's candle, right? You guys should remember this example, right, from deferred delivery, right? We run out the low here, right? Accumulate the stops, closed above. This order block should cause it to do what? Run out buy stops, right? Only one of two things will happen on these time frames. We look at the buy stops. We want to focus on the equity open, and that's what happens at 9:30. We run out the buy stops, trade back down into the daily fair value gap. Right, so long-term perspective is going to be just predicting the very next day's candle, and then on an intermediate term perspective, this is how easy it is because you're using the long-term perspective, right? That's why the long-term perspective is so important. Once you can derive the bias of that very next candle, right, it becomes easy on the intermediate term time frames, because literally the only two things, like I've been mentioning, you're looking for is a rebalance of an imbalance or a stop run in the direction of that LTP, right? And then we just go into STP and we're going to focus on time. If you were to just stop here in the mentorship, okay, and use the long-term perspective and use this logic right here on the intermediate term perspective and blend it with the New York session where in equity open we either rebalance an imbalance or run out stops, you'd already see a lot of success, okay? But we're going to keep going.